So I've just recorded a 20-minute video on this pair just to realise that it didn't record, which is always great. But let's do it again. So I've done some back testing on the weekend on UJ, as I also put on my Instagram. So we're on USD/JPY hourly time frame. I just want to go through this trade that I back tested. Now I don't trade this pair, but I looked at this pair on the weekend, and yeah, let's go through it because I think you'll learn a lot. So previously we had this impulsive move up, and we can see prices come down with these lower lows and lower highs back to rebalance all of this price here. Now this entry is one of my go-to setups that I've traded for a very long time, but obviously with some different confluences added just to up our probability really. So let's get into it. So if we look at this, we have lower lows and lower highs. We had price made this lower low here, and we had a little pullback in price. So this would be the lower high that I would want to see broken, which would then give us a order block, which would be the last down candle. Now, as you know, we can refine it down. Now what I'm doing is looking for my hourly breaks in structure, looking for the order blocks, but then I'm refining on a 15-minute time frame. So let's get into it. 15-minute. We now know we're looking at this to get long from. So let's go into the 15, and we can refine it down. This is the last down candle, but this would be where we can refine it down to, because this is the last. This is the large impulse that broke structure. Now, 5-minute, am I looking to refine it even more? No, not personally, because it gets to a stage where can you over refine on your order blocks and points of interest? Definitely. Like you can, if you keep refining down, you're going to go from the 15, 5, 3, 2 minute, 1 minute, 30 second. Where does it get to where you say, okay, this is where I'm looking to get long from, and stop refining? Because you can definitely over refine, which I think a lot of people are, or a few people I've seen are doing. But for me, I like to keep it simple. I'm looking at my hourly breaks in structure. Where's the momentum shifting? Plot on order blocks, then refine it down on a 15. Just like this. So this is where I'm looking to get along from if price comes back into it. Okay, so we can see, let me just come out of this, take it back to here. You can see after breaking structure, price comes back into it. So now we can go to a minute time frame and look at price. So this is the 15-minute POI. Okay, now we was breaking structure, coming up, imbalance, bit of imbalance down here. Okay, so as we tapped in, lower lows and lower highs, we tap in here and we put in this lower low, which makes this the most recent lower high. We then break structure, we wick it here, but then we do close with these two wicks here, and this would be the first entry for me. So let me just take these off and delete that. I'm also going to delete this now because we know where we are in price. This is the 15-minute demand level. We're looking to get long on breaks in structure. Okay, so the first area is here. So we've broken structure. Now where would be the entry or the candle to get long from? Well, we have this little candle here, but I wouldn't be looking to take this because for me again it's too refined, and price could go from here after rebalancing this bit of price here. So for me, I would take the range. So this is a range in my opinion. We have inside bars. This is the low that made that low from here. So from this candle to here is a range. But I would take the last down candle, which is here, as my order block because it is the last down candle. We have this, but it's not, of too much interest to me. So this is the trade, okay? So we broke structure, we come back in. So I'm setting it on the top of the order block. We get tapped in here. Stop loss for me wouldn't be at 2 pips because that is choking the trade in my opinion. For my personality, I'd rather have it at 2.5 down here. And you can see the trade lost. So does that mean that this was a bad trade? Definitely not. It's a great trade. It just didn't play out. I think the misconception with smart money is you always need to know, and in some cases this is true, you do need to know the why of price action, of course, but if you take a loss, you shouldn't really be thinking, why did that not play out? Did I miss something? Did I miss an order block or a bit of imbalance? In some ways, I don't really agree with that because smart money, no matter what form of smart money you're trading, you're always going to take losses. Like you just can't avoid it. I don't care what anyone says, they're always going to be there. So you can take the best trade ever, smart money, the best trade, best setup, and it will still lose sometimes. You will still get trades that lose. That's just how trading is. So although this trade meets my plan, this for me is a higher prop setup and it's one that I would take every day of the week. It's still lost. Now I'm not sitting there thinking maybe that breaking structure wasn't too convincing, maybe it wasn't actually a good setup, when really it was. I would take this every day of the week. It just lost. So now that we've taken a loss on that trade, a lot of people would then miss these next upcoming trades, which ultimately would bank a lot of percentage. So I'm just going to take it back. So we've taken the loss. We know where we are. We're at a 15-minute demand. We now put in this new lower low on the 1 minute time frame after breaking structure here. Now this was probably just grabbing liquidity. You can see we tap back in to rebalance a bit of this price here. We put in a lower low. Now for me, the lower high would be either this candle or this candle. If we also look left, we have an imbalance from this wick to this wick that was left. You can see price comes down to mitigate perfectly. We tap below it ever so slightly, which was likely reacting to a POY here. We then momentously break structure with this candle, which also leaves imbalance from this wick to this wick. Now with imbalances, as you know, we trade them as extra confluence. I don't recommend trading off of the imbalance because it won't work out for you. We need to just use them as extra confluence. So what does that mean? Well, now we've broken structure again, we can take this candle here. Now for me, I would take this candle as opposed to not taking this one because this is larger and you can clearly see the momentum came in on the next candle. So it makes sense. We also have imbalance. So we have imbalance just above the order block, which gives extra confirmation or confluence that we're going to tap in from here and then continue up, which is what we've done. So again, we can set our entry at the top of the order block. Now, as you already know, with 1 minute entries or 1 minute order blocks, I'm setting an entry on the top of the order block. So the top of a bullish order block and the bottom of a bearish order block. Now there will be variations. If the order block is, say this order block is as wide as that, if I can't put my stop loss at the top with my stop loss below, if it needs to be more than really 3 pips, then I'll be looking at the EQ, just so I can get in with my stop loss no more than 3 pips. So ultimately I am most cases we can get in with the little order block and we can get the stop loss tight with still room to breathe. But in that example, I would change it to the EQ. So back to the trade, we broke structure, last down candle before momentum, we tap in, rebalance this inefficiency, tap into the order block, and this is the second trade, which would have run for 11 to 12 R, I think even a bit more. But most traders would miss this trade because their emotions kick in after taking a loss here. They're thinking, why did that lose? How was that lost? That's a great trade. But it's just part of the game. They then miss the next two. There's another trade here. They then miss it due to their emotions, because you need to think we're still within the 15-minute POI, which is here. So we can still look for trades even after taking a loss, which I think most people sort of don't really understand, because they take a loss and they think, the trade is going lower now. This is it. This is the trade. It's gone. I've taken a loss. Move on. But really, you need to come back to think of what is price doing. We're still breaking structure. So we broke structure here, imbalance, order block, mitigation, continuation, breaking structure. Now, if you didn't take this trade here, then this is the next opportunity here. So we break structure again, momentously. Now you're probably thinking, where would be the entry point? Because we have this candle here as an entry, or the order block, or the second order block, which is down here. Where would we get involved? Now for me, and what I've tested, is I would always take the extreme. So what is the extreme? Well, it would be the lower order block, so down here. This is the one I would take over this higher one. Now the reason being is it's just what I've had more success with. Sorry, excuse me. If price was to come down to this order block here and then go from here, then I really couldn't care too much, because I've stuck to my plan. This is what I'm waiting for. If it doesn't come into this area and goes from here, then once we break structure, that's it. We take the order off, and it's just a trade that didn't get triggered, and there's not much more to it really. As long as you stick to your plan and stick to what you've found in your testing, you're going to succeed. Like this, if you take these entries here, the higher one, then that's great. Just because I take these ones doesn't mean you need to. Just stick to what your data shows and your trading plan, and stick to it. For me, I would wait for this one because it's just what I've seen be more successful. So this is the last down candle before the breaking structure. We can then refine it down to this candle here. You can see price tapped in. We also do have imbalance. So we have imbalance from this wick to this wick, also imbalance from this wick down to this wick. Okay, so imbalances just add confluence. We're not trading them, we're just adding confluence. And then you can see, so this is the first trade, or this is the first trade, 1% loss. Second trade, you're looking at 10 minimum R. Third trade, again 10 minimum R. And this is what we call order flow. So we're breaking structure, mitigating. We're not trading below the higher lows. As you can see, we come down to test it, but we don't really close. And then you can see as price is now efficient and essentially transactions have now been completed, large banks are getting in here. This is when momentum kicks in, and yeah, this is how it played out. Now obviously I'm not trading this pair, but I think I wanted to go through this trade because I think you'll learn a lot from it. Again, if you take losses on the first trade, don't get emotional. Realize it's part of the game and just look to see what price is doing. Is there more entries to be taken? Look left. What are we tapping into? Where's the liquidity? Where's the order blocks, manipulation, imbalances? Stack all the confluences and take the trades. So that's the trade I wanted to cover. If you have any questions on it, please feel free to message me in Discord over private DM. And yeah, if you took value from this video, let me know. And I hope you all have a really good week. And yeah, let's smash it in the markets. Let's try and beat last week, which is probably going to be hard to do because it was a great week. But let's have a great week nonetheless. And yeah, I'll speak to you on Discord.